Hello, this is Bob Joyner, and in this video we're going to answer a question you've probably never asked before, which is momentum trading. Is momentum a contrarian indicator? The reason I'm making this video is because I've seen some things on the charts lately and some price movements in the markets that I think can sometimes trip people up. So on July the 19th, 2021, we had this big gap down in the market. You can see S&P 500 on that particular day, July 19th. We had a big gap down in the market, and there's a lot of bearish momentum. Prices obviously moving down, moving down, moving down. And that can kind of trip people up, especially if you're new to trading. So that evening I reflected on it a little bit and looked at the charts a little bit deeper. And this is the chart that I actually sent to my Bears and Bulls swing trading group. And what it shows is this orange kind of box here. This is the same chart that I showed them on that day. And you can see where this orange box here kind of extends out through price over a couple different levels. And this chart that I'm showing you is a weekly, daily 1 hour chart of the S&P 500, and then we had this big red bar gapping down bar, as you can see, coming right into this area of possible support. So the first rule of physics is an object will remain at rest or in a uniform state of motion unless that state is changed by an external force. When you have momentum, it's easy to think, well, we're going to go down, we're going to go down, we're going down, okay? But if you fail to take a little bit of time to look at the surrounding charts, the surrounding indicators that I'm going to show you in this video, then you might miss the fact that it was actually way oversold. Momentum was too strong, coming down into an area of support in this case. So the basic rule is this, is high momentum moving up, where price is moving up, is strong bullish momentum looking for resistance. And you need to be thinking that way. High momentum pushing down, bearish momentum, is a bearish momentum, a bearish move in price looking for support. I mean, at some point it has to bounce, right? At some point it has to resist. So what you're looking at is trying to look at the charts and determine ways in which to determine where might that momentum stop, so that you can enter reverse positions, and also so that you can take your exits and make proper trading decisions. So this little video here is trying to just tickle your mind a little bit and try to get you thinking a little bit about those, so that when you see those circumstances again, you might be able to reflect a little bit by following the steps that are in this video. So Newton himself said, everybody perseveres in its state of rest or of uniform motion in a straight line, unless it is compelled to change that state by forces impressed thereon. And that's what we're talking about. Same thing as if you throw a red rubber ball up against the ceiling here, it's going to come back down, not just because of gravity, but because it hit an area of overhead resistance. That momentum changed, okay? And then the red ball falls back down. So indicators that can measure momentum, I'm not going to go into each of these, but just to mention some that you can play with on your charts. Just a simple moving average crossover, RSI, or Wilder's Relative Strength Index, MACD, OBV, and some that you might not think of, that you might not have played with before, that I use quite a bit, Copic Curve and the Fisher Transform. So here's the basic idea I want you to think of, is whenever you see momentum, whenever you see strong momentum, either going up or going down, always look up. If price is going up, you want to see, are there areas of overhead resistance where price might resist that? If price is moving down strongly, you want to look down and you want to see, is there a place where price might find support? You can look left, okay, and you can look right, actually, believe it or not. So this is what happened, as I mentioned, on Monday, July the 19th. We came down into that area of support, and of course what happened after that was this. So we went up, S&P 500 made new highs after bouncing off that area of support. But what's important is, at that point where price is moving down, if you're not looking to the left, if you're not looking down where price might be finding support in that area of momentum, you're probably going to be making bad trade decisions. You're going to dump positions that are long right at the worst time. You're going to jump into that short position right at the wrong time. because you are not seeing that level of potential support there. This is a 1-minute chart of the SPY. These are using conditional colored candles, but just to kind of show you, same thing, dark green in this case is actually overhead resistance. It's strong momentum up, yep, but there was an area there of resistance, and the best play was not to go long when you see that momentum, but actually to go short right at that point. Same thing down here when you have these red momentum bars, bearish bars pushing price down, right? Showing that price is pushing down. And you have those repeated down there. And when you have repeated areas of momentum pushing down into the same area and price keeps bouncing off that area, leaves a clue. This is an example of a 5-minute, 1-minute chart of the SPY again if you're trading options. And you can see these two red circles over here on the far right. We have the red momentum bars pushing down on the 1-minute chart, red momentum bars pushing down on the 1-minute chart, but that was exactly the best entry on both those. Those were not reversals, those were bearish momentum coming into support and giving you actually the great place to go long. Okay, so it's a contrarian indicator in that case, and it also helps you to see the context over here, which is a 5-minute chart in this case, which was a very bullish context, obviously. This is just another example of the same thing, different day, but the same example that I'm showing you again here as well. Another example of an indicator that you can use both above and below price is VWAP. That's what this thick orange line, that made it real thick here so that you can see it. If you have high momentum pushing down into VWAP, high probability that price is going to find support there. Again, context matters. And you can use Ichimoku if you're not familiar with Ichimoku. I'm not going to go into it here, but you've got a Kumo, which is this purple area in this case, spread out to the right of price, and that can give you an idea. If you're looking to the right of current price, Ichimoku and the Kumo can give you an idea of price support there as well. This example is a US CAD coming down into some support, and then this is an example of Aussie US dollar. You know, high probability that price is going to hit resistance when you look to the right and you look above, both using Ichimoku, Kumo there. So the idea is to look up. You want to look at pivot lines, recent historical price, VWAP. You can look down at those same things depending on which way price is going. You can look left at larger time frames. For example, as I did in that example of the S&P 500, I was looking at the weekly, daily, 1-hour chart. I wasn't just looking at the 5-minute chart. And you can look right, as I mentioned, at using Ichimoku, the Kumo. So is momentum a contrarian indicator? And the answer is yes, when it is compelled to change that state by forces impressed thereon, to quote Newton there. So I hope that video, that little review, will be helpful for you. Again, when momentum hits support or resistance, look in all directions. You know, step back for a second, look in all directions, up, down, left, right, and see if you can see a reason why momentum might actually stop pretty soon here and give you a great reversal entry. As always, hope that you subscribe to the channel if you like this video. Give it a thumbs up if this information is a little bit helpful to you. And see you next time.